Good morning, traders. Before we begin, stay until the very end because there is a short quiz based on today's breakdown. Test yourself to learn price action on gold better. And if you value structured daily gold analysis without hype, consider subscribing. Now let's talk about yesterday. Gold traded in a tight 100-point range between 5205 and 5105. Compared to the previous 5% expansion day, volatility contracted significantly. This tells us something important. The market is digesting the previous move. When you see tight consolidation after expansion, it usually means one of two things: accumulation before continuation or distribution before reversal. Today is about identifying which side liquidity is building towards. Let's start step by step. So as usual, we start with the previous day. Let us mark the previous day high, which is at 5206.26, and previous day low, which is at 5105.370, and this will be a previous day high. This is a 100-point range, which is now your dealing range. In tight conditions, PDH and PDL become even more important because liquidity builds on both sides. When volatility compresses, expansion follows. So today's key question is which side is going to get taken first? A sweep above 206, which is 5206, or a sweep below 5105. Until one side is cleared with displacement, we are still inside the balance. Move to the daily time frame and notice something important. There are fewer fair value gaps. While you can see that the previous day, we now remove the magnet, and the previous day has made a sell side imbalance here. So this is a one-day sell side imbalance, which meant that the extreme move down was not countered. So which can generally signify weakness in the market. In this case, since it's left a big SIBI imbalance to the downside. When you can see reduced imbalances, it means the market is not aggressively repricing, it is stabilizing. In this environment, long directional trades are less likely until liquidity is engineered. So today, expect liquidity grabs, false breaks, and slow expansion before real momentum. We now move on to the 4-hour chart, and you can see that there is a 4-hour SIBI overlapping with the one-day SIBI. There are fewer, as you can notice. The day starts at 1500 hours. There are fewer imbalances. I can see one here, which is from the previous day, the day before yesterday. So that's that. While this was our dealing range yesterday, right? We can see that there was a 4-hour void which was formed yesterday, which we had marked. That still remains. This is from yesterday. And we also have a 4-hour void which formed at the start of today, which we mark here. Right? So we don't see many fair value gaps which are formed when the market actually displaces. All of yesterday did not make a fair value gap. So it means that the market was rotational. In rotational days, price respects volume levels, psychological numbers, range highs and lows. If price trades into a 4-hour imbalance and reacts weakly, that confirms low momentum. If price displaces strongly through a 4-hour zone, that signals expansion beginning. You can see that the market tested this level multiple times, but it always rejected and it wasn't able to slice through. That being said, this 4-hour can act like a support. The absence of FVGs is information. It tells you not to force trend trades. We now move on to 1 hour and we look inside this 100-point range. Let us first mark any FVGs. It is very unlikely that you see lack of FVGs on the 1 hour, and you can see that there are no FVGs. There is one slight FVG here, though it's already been overturned. And the only FVG we see is from today. The first one being a void here, the 1 hour void, which is overlapping, which is why we will not mark that. And this, right? This is another BC. This is a buy side imbalance, which acts as support in the market. The expansion move often comes after a liquidity compression, which yesterday did. So today is likely a manipulation day before direction. Now we move on to the most important aspect, which is the previous day's volume profile. As mentioned before, volume profiles tell you where there was maximum institutional activity the previous day. So we have to mark the value area high, the value area low, and a point of control. This is a range between which about 70% of trading activity happened the previous day. So the value area high is the top of the range of the 70%, and value area low the low of that range, and the point of control is a very powerful point. So we did yesterday at 1800 hours and we extended until yesterday's 1600 hours. This is all marked in New York time. This is the value area low. The value area low is at 5134. The point of control is at 5149.6. And the value area high sits at 5178. In tight range days, POC becomes very powerful. Why? Because it shows where the market agreed upon price, which was at 5150 around. If you see a psychological level around this, it is 5150, and to be precise, it's 5149.6. If price keeps returning to POC, that confirms balance. If price leaves values and fails to return, that signals initiative activity. Rotational environments respect volume more than imbalances. So today, watch the POC reaction very closely. You can also see that the POC is overlapping with the 4-hour void. Voids are very strong magnets, and you can see that it is overlapping, and as I'd shown you before, there's a 1-hour void as well. We've avoided also marking that as it is overlapping with the 4-hour void. So we also need to mark yesterday's equilibrium, which is a 0.5 level. And in this case, we can see it is at 5155, which is relatively closer to the POC, which is why we will not mark it. So the 50% level is equilibrium. In tight conditions, above 50% is premium and below 50% would be discount. If price is trading at a premium near 5200, upside becomes fragile. If price is trading at a discount near 5100, downside becomes fragile. Expansion usually starts after equilibrium reaction. So watch for displacement from premium and discount zones. In this level, 5150 is going to play a pivotal role in today's trading day. And as mentioned, 5100 and 5200 are major psychological levels for today's market. Round numbers attract stop losses, breakout traders, and emotional entries. So if 5200 breaks cleanly and holds, upside liquidity opens towards 5250. 5250 is a higher psychological level and a stronger magnet if bullish expansion happens. On the downside, 5100 is key. In tight range markets, psychological levels often trigger the breakout. So what is likely today? The highest probability scenario is a sweep above 5205, reject and return to equilibrium, sweep below 5105 and reclaim the 5100 level to rotate higher, or a clean break over 5200 to target 5250. The key is displacement. If price breaks a level without strong momentum, it's likely a fake move. If it breaks with large candles and imbalance creation, expansion is beginning. Do not trade the middle of the range. The middle is where traders get chopped. Wait for liquidity sweep, displacement, retracement, and confirmation. Range days punish imbalance. Expansion rewards discipline. So in closing, yesterday was compression, today could be expansion. Mark 5100, mark 5200, watch 5250 if bullish momentum appears. Trade structure, trade liquidity, and not emotion. I'll see you in tomorrow's analysis.